If you want to understand how Bitcoin has tanked in the last week, watch this. So hello guys, and welcome back to another video. In this episode, we're going to be talking about a familiar cryptocurrency that you'll all be aware of, which is Bitcoin. Now, again, as you'll be aware, Bitcoin has tanked quite a bit. If we pull up the corresponding graph, we can have a look and see that there's been a bit of an ebb and flow through the week here. But more generally, if we zoom out, that's where the tanking has occurred, right? It started off at one point mid-January at 71k per Bitcoin, and that has come all the way down to 50k. And just as an FYI, this is in British pounds, so if anyone's watching and they're thinking about it in terms of dollars, this is going to be in pounds, but the same arguments kind of apply. And I guess what I wanted to discuss in this video really is, what might have caused that, and from that, be able to discuss a bit more the long-term trajectory, maybe any short-term movements that might occur, and talk a bit more about Bitcoin, cryptocurrencies, and, aspects of the economy as a whole. To kind of understand this tank, we're going to have to go a little bit back in time. If I change the graph here. Yeah, so you can see this is what it looked like in the last year. This is what it looked like in the last 5 years. And specifically around this time here, around early November 2024, was the point in which Bitcoin had basically broken the 60k barrier. And that's not a coincidence. That was the moment in which Trump was elected to be America's new president. And with that, Trump had launched a personal crypto brand. He wanted to make US the crypto capital of the world. And I think with that, investors, the public heard this and definitely bought into Bitcoin and decided to pour their money into Bitcoin, hence such a steep rise here. In fact, it went well above 60k in the end. It went, towards the end of 2024, it went around that 75, 80k mark, which is a big increase from below 60k, is over 25%. So if you had holdings around that time, well done. But since then, bar the peak around early 2025, we can see it maintained its price. It had a brief period where it hit 90k, but now it's gradually dropped, right? And, if we talk about it from a purely political perspective, what's happened since then is one of the things that happened when Trump first came into office was that he took on Elon Musk as a close advisor. And I think, especially with him being such a big advocate for other cryptocurrencies and specifically meme coins, Dogecoin, he kind of, along with Trump's words, added to the idea that cryptocurrency was really going to take off. And their partnership fell out pretty quickly. I'm not sure exactly, maybe around this time, actually, when this drop happened, might have been when Elon left the White House or left being a close aide of Trump, which I don't think is coincidental. But more generally speaking, I think the point is that the hype of, Trump is in power, Trump is in president, and a lot of the sort of positive speculation surrounding cryptocurrency is slightly cooled over a year on, and that would explain the sort of trough we're seeing now. But of course, this is a big correction, right? This is not just like a 10%, 5% drop. It's gone from 90k to at one point, if we look at the lowest point in recent time, around 50k, right? So don't know what that is as a percentage. It's like 4/9, right? It's like 40%, which is, maybe this might say it better. Certainly the last year, 32% decrease, which is large, right? And just have that there. There's got to be more things that are that contributes to such a decrease, right? So, I was reading an article by Deutsche Bank on this actually, and one of the things that they suggested was a trigger for this drop, along with what we've discussed, is also Trump nominating Kevin Wall for the Fed chair. Now, I guess from that, there's a little bit more for market fear that we might see higher interest rates. And why that's significant with Bitcoin is over the years, Bitcoin's had a tendency to kind of ebb and flow with the market. When the market in general is doing quite well, um, Bitcoin seems to go up in price when the market isn't. Bitcoin seems to be going down. It might even be worth, let's have a look actually. Never know. I guess maybe the differences aren't as pronounced in the S&P 500, but certainly there's a case being made for it. Even you can see here where Bitcoin had its dips around April, S&P 500 was having a dip as well. So there seems to be correlation between when Bitcoin's price goes down and when S&P 500's price goes down, which, as you should be familiar with, S&P 500 being the 500 largest companies within US by market value. So, yeah, I mean, what other things that Deutsche Bank said, with high interest rates, because of what we've just discussed, they would think that there'll be a reduction in demand for risky assets. And crypto is still quite a risky asset. It still has a lot of ups and a lot of downs, and it still is relatively volatile. If I zoom out over the 5 years, I mean, you don't need a graph for me to tell you this, but you can see how much it's gone up, it's gone down at various moments over the last 4 or 5 years. It's not normal in comparison to your everyday stock. The drop now seems logical under tighter interest rate expectations as a result. And, of course, a steeper drop could be indicative of the fact that Bitcoin is a relatively new asset. Of course, it's only been around for 10 years, still very, very new, and still has some way to go to establish itself as a asset that can ultimately be trusted, right? People still jump on it when prices go high and seem to drop off in an instant as soon as it starts to shoot down. So there's still a little bit of a gap in terms of being able to fully trust it as an asset. And so with that being said, we can talk a little bit more about what it means for Bitcoin going forward, right? Obviously it's just had this trough. You'd like to think it's going to maintain price, and going forward, what does it mean? Well, I mean, so many factors affect it short term, right? I think most notably, it's the intervention of politics, right? When politics gets involved, especially with cryptocurrencies, and with cryptocurrency still being so new, I think some governments are still juggling with what's the best way to handle it. So don't be surprised if regulation or other sorts of intervention come in and massively affect price of Bitcoin short term. I think what's become a little bit more interesting now to discuss is the long-term prospects, right? Because whilst I mentioned that it's a new asset, right, to be in the market for 10 years, but 10 years is also more than enough time to suggest that Bitcoin isn't some sort of bubble that's about to burst, or it's going through a phase, cryptocurrencies have come, but they're going to go sort of thing. I think if we look at the all-time graph here, when it first got some attention was back when I was in uni, right? So 2017. And even you can see this little trough here around the 10,000, 11,000 mark. People were talking about that as being a bubble back then, right? And we can see what it's done, in the last 8-9 years. It's had a lot more peaks and troughs, but what's generally happening is it is gradually taking steps further and further upwards. And definitely think it's here to stay, which begs the question, can it provide some sort of store of value, a reliable source of value? And does it have the ability to go up against something like gold, right? Now, for those of you who don't know, gold is an asset that people typically put their money towards almost as if it's like a safe haven, right? Especially in countries which are economically unstable. So, for example, you might have some countries like, say, Zimbabwe is experiencing hyperinflation. And if you're someone who lives in Zimbabwe, you obviously don't trust the currency at the time. So you'd rather put your money elsewhere. And gold provides a safe alternative since it's been around for thousands of years. It's got a proven track record of showing slow, consistent growth over 5-10 years. And it might have short-term dips here and there, but if you're looking for something that's going to maintain its value and, if anything, increase, gold is typically safe, right? It's highly unlikely to ever lose value or ever go to zero or crash in a way that Bitcoin might potentially do, since gold will always have intrinsic value. Gold has been such a valuable material for centuries, and across different cultures, it's always had a purpose outside just being a store of value, or, to hold the function similar to what, paper money does. But the longer Bitcoin stays around, the more of a case I personally think it makes for being an alternative to gold. I mean, if we talk about the benefits of gold and why it was seen as a strong store of value in the first place, I mean, yeah, let's go through it, really. Oh my God, yeah. Gold was initially chosen as a foundational store of value. I've mentioned its intrinsic value, its use in different cultures, but it's also scarce, durable, and distinct, right? Gold, you can't just say with like paper money, you can rip it up, but gold, it's quite difficult to kind of remove its value from physical damage. Even if you bend gold or whatever, it's still gold at the end of the day. It can be reshaped into other purposes and maintain its value. Its indestructibility. It's been around for thousands of years, and it will probably be around for thousands of more years, right? And, other things which made gold good back in the day was its portability and divisibility. And so what I mean by that is gold packs a high amount of value into a small package, so making it ideal for carrying large amounts of wealth. So especially maybe hundreds of years ago, they're looking for a store of value or whatever, and not only want it to be valuable as a material, but they don't want to have to carry so much of it around with them. Like, say, if you have a lot of gold, right, you would ideally like it to be lighter and smaller given its value, because it just means, wherever you go, you can keep it with you. And gold certainly offered that. And as well, what I mean by divisibility is, if, for example, you want to sell a portion of your gold or a set amount of gold or whatnot, it's easier to separate the gold from parts of gold from the rest, so that you can sell it off or use it for alternate purpose or whatever than other materials, right? It's a very important aspect of gold, being able to, if you want to be able to get a certain value of gold from what you already have, you're able to cut that down easily into the chunks that are necessary. Also, it's universally recognized to have value. Whichever corner of the world you go to, people like gold. People like gold. They've got uses for it. They value it in different settings. But I guess some of the disadvantages of gold, we mentioned that its portability. So although it's, a lighter, smaller amount of it is probably worth more than other materials of the same weight and size, coin does one better on it. It's not reliant. Bitcoin is not reliant on being held in a storage facility or your home. It's on the internet. It's over the internet, right? And blockchain technology has become extremely reliable as a source of security. And so coin has an advantage in terms of its security. It's very difficult for it to be stolen. But also the fact that Bitcoin's on the internet means that you can easily transport it, right? This is the same for all cryptocurrencies, but since Bitcoin is leading, and was at the forefront of utilizing blockchain technology, when we're talking about its long-term prospects and going up against gold, in particular, that is a really good advantage of it. I think some people might come back and say, but Bitcoin's reliant on the internet. I would argue that if humanity is not using the internet anymore all of a sudden, worldwide, that humanity is in a very difficult place, and Bitcoin is probably not the biggest problem on their minds. So long as humanity is around now, the internet is around. I think some people I spoke to still think the fact that it's a physical asset does mean it has advantages over cryptocurrencies, right?
Yes.
gold as a physical. We'll just be lazy with this one. Yeah, I guess people still like the psychological comfort of actually being able to see the thing that you own or hold value in. I think there's still something about Bitcoin being all on the internet that maybe makes people feel less secure about it being a store of value. But like I said, that comes with time. The more people get used to this, the more second nature it will become to use Bitcoin as a store of value and a medium of exchange, right? Think about think about our mobile phones, for goodness sake, right? Even people probably, there'll always be skeptics when change happens like this and be like, oh, well, it's this, it's that, the risks of this, the risks of that. But you know, ultimately it was, what's the word I'm looking for? Ultimately, they were here to stay and provided utility. The more people got used to it, and it just became integrated into our society to the point where we don't even question it anymore. So another thing that might be on somebody's mind is Bitcoin's movements are one thing, but where do altcoins fit into this? Well, I think for this, it's quite good to see a lot of crypto ETFs out there, a better reflection of the cryptocurrency market as a whole. So, layman terms, if you've got one cryptocurrency doing really well, the ETF will account for that and give that particular cryptocurrency a stronger weighting when doing its calculations for its ETF. I mean, I guess that's how most ETFs for a market typically work, but it's still nice to always explain it for those who don't know. Right. Righty. About who we are. I'm being an idiot again. So let's look so I like this website. Funny enough, I've done some work with these guys and they're pretty nice, So one of them is the Ultra Cap 5. So yeah, so an ETF like this, right? So as you can see, what this specific ETF does is, I say ETF, it's just like an index really. ETFs and index are sometimes used interchangeably. You can see here they've got the various price levels at various times of the last 12 months, and you can see the corresponding weights attached to the various cryptocurrencies, right? So right now you can see that Bitcoin has got such a heavy weight in the cryptocurrency market. So if I put this side by side, we don't want that nonsense. Bitcoin price 1 year. Yeah, there you go. Right. You can see here, right? Look, when Bitcoin goes down, the whole market is typically down, right? So Bitcoin's weight when we talk about the cryptocurrency market as a whole is so great. It's almost like whatever else happens to one of the other ones doesn't really matter, no matter what you are, even if you're the next biggest one, which is in this case here is Ethereum, but that's got a 12.5% weight here. And another thing also is all the cryptocurrencies individually are moving in a similar market trajectory. I think, if I even bring up Ethereum price, you can see here in the last year, look, it's mimicking Bitcoin's movement, right? And that just goes to show that's another thing to be aware of. Individually, they're moving similar to one another, not necessarily as a response to Bitcoin, yeah? Which shows that right now, cryptocurrency is still moving almost in reaction. The idea of cryptocurrencies moving in reaction to market movements is still very much a thing, right? And when the market's a bit more volatile, when there's consumer confidence since cryptocurrencies as a whole are seen as risky assets, when you're seeing all these cryptocurrency prices go down, the index going down, what that can also be an indication of is how confident are people in buying risky stuff, right? When the cryptocurrency prices as a whole are going down, it's not a far-fetched opinion to have to say that people are just, they're not feeling very risky right now. You know, they're holding back. What was I saying? I was talking about currencies as a whole, and as you can see, we have it's got the five biggest players in the cryptocurrency market: Bitcoin, Ethereum, Ripple, Solana, and ADA. I guess in my time of looking at cryptocurrencies, I've never seen any cryptocurrency move like completely different to Bitcoin in a way where I was like, wow. I think only one out of all of these which has a little bit of something else going for it is maybe Ethereum. The idea of building decentralized apps on its network is good, right? But I think for people to start building these decentralized apps on the Ethereum platform in the masses, it's a little bit like Bitcoin still trying to establish itself as a medium of exchange. Ethereum's probably a step further behind in the sense that it needs people to trust cryptocurrencies as a medium of exchange and for a lot of people to start actually building stuff on it. And if it ever is able to get hype, if you've got your friends starting to use Ethereum more, I might have an inclination to use Ethereum more, right? But Ethereum does have a lot of potential because the concept is good. I'm not going to explain it too much, but have a look at it in your spare time. But it's worth doing if you're interested in cryptocurrencies as a whole. I mean, I don't know much about XRP. I think it's used in the financial markets or in the finance sector more, right? But I couldn't tell you too much on that. But yeah, I mean, to summarize with Bitcoin's long-term prospects, I think it does have potential to replace gold and to become a store of value, but it will just take time for the masses to trust it as a store of value. The current reality is during volatility, investors just don't trust Bitcoin enough yet, which is why we see it ebb and flow with the market, and it's still acting like a risk asset. You know, give it 5, 10 more years, I think it'll be more established. I think the value will gradually rise. This is just my opinion, not advice, but it is an asset worth putting your money towards in the long term, not putting loads of it because you never know. But if you want to spread your risk, there's no harm in looking at this as a long-term asset for sure. And yeah, I mean, on top of that, are there any other things which might have caused to Bitcoin falling in price? As we've talked about, Bitcoin and cryptocurrencies as a whole seem to have a correlation with the markets as a whole, right? And one of the reasons for perhaps investors being a bit more cautious is a lot of big firms are investing in AI infrastructure. So some of the stuff that's come out is that about $1 trillion has been wiped from the S&P 500 software index. Firms like Amazon, they're planning to invest $200 billion into AI this year. And as well, big four firms, so your KPMGs, EYs, Deloitte's, PwCs, they're looking to invest. Their spending in total in this area is about $630 billion. And we'll get onto why that is in a second. But, you know, why is there a fear from investors, from guys in the corporate world over AI, right? Well, I don't think it's a secret. There have been quite a lot of corporate firms that have been doing layoffs, and especially in junior roles, not hiring much. And a large reason for that is AI. It is replacing tasks. It's able to replicate things like drafting, analysis, coding, and reviewing. I mean, I was a consultant, and these were tasks that I was doing in 2021, 2022. And what it took me hours to do, what it took consultants hours to do, can simply be done by AI quickly. If I've got like an 80-page reg document, instead of looking through it manually, looking for a certain section or text to compare with another document, you can stick both of these documents into AI and be like, tell me the difference, tell me what page number, tell me this, tell me that. And it does it so quickly, saving hours for both the individual using it and the firm as a whole, which is, yeah, I mean, it is crazy. But more generally, SaaS companies, SaaS being software as a service, and I'll give you an example because I was part of a SaaS, was that, their business models are built on recurring subscriptions, clients paying monthly fees to use their services for years, right? And AI, we've just mentioned some of the stuff it can do. It can replace the human actions, the human services that are produced, right? And more generally, it reduces uniqueness of productivity features. So when I talk about me being involved in SaaS, I was involved in sort of the RegTech world. A lot of it involved comparisons of regulatory texts, scanning for the latest regulations coming in on, every month, comparing large texts and making it clear to the customer, the client, and all of these things now. If I'm somebody that had been using consulting services like these or using a SaaS product, I'm probably looking at it and thinking, well, what they produce is good, but I could probably do 70, 80% of the work just using ChatGPT and training my guys on ChatGPT rather than paying large sums of money to use the service. And so as a result, there's having to be defense strategies from consulting firms, tech firms as well, right? And most notably, they're trying to build their own AI infrastructure. They're trying to build, their own ChatGPT, if you like, that's built on their own data and their own needs. The models can be more efficient in the work that they do, and they can make it, exclusive to them, right? Which this is why they're forking out so much money on these things, because it's doing work that humans were doing and everyone's starting to use it. So if they don't fork out all this money on AI, they're going to fall behind, both in terms of productivity and in terms of the service that they're able to produce, right? So then these firms can come back and say, hey, we've got our own unique AI model that you can't get anywhere else. ChatGPT can't do this. Google Gemini can't do this. So, then they can sell that as a service instead. So, yeah. All I've just said about the investments in AI just basically means an uncertain period. And when it's an uncertain period, these sort of price changes where people are holding back in their investments and holding off doing risky investments. And since cryptocurrency is still a relatively risky investment, we're seeing the price changes that we're seeing. Anyways, that's it for the end of the video, guys. And, it's my first time doing a video on sort of the market. I hope you enjoyed it. It is enthralling stuff and straight into it. I hope you're able to understand my sarcasm, but it's important to know, the world changes fast. AI is disrupting everything. There are big changes around the corner. It's just a matter of when, not if. And, if I can contribute to helping people stay on top of what's going on, these videos help me too. Then I'm happy to do that. And if you're enjoying the series, if you're enjoying the video, please like, subscribe, comment. I'd like to make it a weekly thing. Give me any recommendations if you're intrigued by what you're listening to as well. And be sure to stay tuned.